My name is Steve Watts. I'm a Capital Allowances Director in the Real Estate team in London. In my session today, I'm going to focus on the recent changes to the UK Capital Allowances regime, and in particular the new Structures and Buildings Allowances, including some of the key practical considerations of these changes. Over the last few years, there has been a great deal of lobbying for the introduction of a tax allowance for expenditure on buildings or structures. This was identified as an area where the UK tax system has historically been uncompetitive against other major economies. It is also an allowance that can assist in encouraging investment in buildings or structures. The results of the Office of Tax Simplification Review, which considered replacing UK capital allowances with accounting depreciation, was published in June last year. This recommended the introduction of a buildings allowance as a long-term policy. So it was as a big surprise to many that the autumn budget announced the immediate introduction of structures and buildings allowances from 29th of October 2018. Although structures and buildings allowances were announced and will be introduced from that date, only provisions for its introduction were included in the Finance Act 2019. Draft legislation has been subject to a period of consultation, and on the 19th of June this year, legislation was due to be laid before Parliament to provide for this new capital allowances, which is expected to come into force. We expect final legislation alongside specific technical guidance to be published during the summer. Therefore, we are in a period for which the Structures and Buildings Allowances potentially applies, but the legislation on how it operates has still not been enacted and published. Firstly, I will provide a brief overview of the main conditions for Structures and Buildings Allowances. SBA is available for expenditure on the construction, alteration, refurbishment, or the acquisition of buildings or structures. However, there's a caveat to this in that it will only apply where the original contract for the construction of the building or structure was entered into on or after the 29th of October 2018 and expenditure was incurred after that date. There are also some specific conditions. Dwellings are excluded, which will be specifically defined for these purposes, but will include dwelling houses, residential accommodation for pupils, student accommodation and prisons, etc. It is a real shame that the government have not considered extending this relief for some of the areas of residential sectors to encourage investment in particular areas, given the requirement to increase the stock of housing in the UK. Expenditure on land, acquiring interest in land and planning permission are also specifically excluded. And in contrast to plant and machinery expenditure, for which allowances are available in the year expenditure is incurred, structure and buildings allowances are only available when a building or structure is first brought into qualifying use. This will mean for larger construction projects, the actual allowances may only be available many years after a construction project commences and the building is first let or occupied. SBAs will be available at a rate of 2% per annum on a straight line basis, giving relief over a 50-year period. Any expenditure on plant machinery and integral features is also not eligible for the Structures and Buildings Allowance, and therefore it will still be necessary to segregate expenditure on these assets to the relevant pools for which faster tax depreciation will be available. A consequence of this is that Structures and Buildings Allowances will not be eligible for the annual investment allowance, which currently is available up to £1 million per annum up to the end of December next year. One of the major differences is the interaction with capital gains tax. On disposal of an asset, any Structures and Buildings Allowances that are claimed will need to be taken into account in the capital gains tax calculation. This will reduce the base cost of the asset. This means that the allowance will really be a timing difference rather than a permanent difference. In respect of the rules, there are some specific practical points that need to be considered to be able to claim structures and buildings allowances. One area where we've already had lots of inquiries is whether a project could be eligible for the relief. As stated earlier, allowances are available where construction contracts are entered into on or after the 29th of October 2018. However, it is also necessary to consider if any preparatory works, such as demolition or enabling works, were commenced prior to that date, with a view to bringing into existence a building or structure. If this is the case, then the allowance may not be available. A relevant interest in the land is also required to be eligible to claim the allowance, and different interests in a building may be able to claim allowances at the same time based on the expenditure incurred. So, for example, a landlord would be entitled to claim allowances in respect of expenditure incurred on the construction of a building, and a tenant is separately entitled to claim allowance in respect of elements of its fitting out expenditure on the building during its period of the lease. For a leasehold interest, at the end of the lease, the allowances ends, and any remaining structures and buildings allowances would be lost. For subsequent expenditure on a building or structure after its original construction, for example, an extension, refurbishment or conversion, will be eligible for its own separate allowance over a separate 50-year life. Buildings that are used for residential purposes will be excluded, but also this will be extended to any areas ancillary to the residential use, for example, communal areas. This is a major difference to the plant and machinery rules, because although dwellings are specifically excluded, any plant and machinery within the communal areas can qualify for plant and machinery allowances, whereas for structures and buildings allowances purposes, this will be non-allowable. On the sale of a building, there is no balance in adjustment. The purchaser simply will take over the residue of the remaining allowances over the rest of the 50-year life period. One area to consider is that the grant of a leasehold interest for 35 years or more for a premium, and providing the premium is 75% or more of the value of the retained interest, that will be considered a disposal for SBA purposes, and the lessee will be entitled to claim the allowance rather than the lessor. However, one major area to think about is that for any allowances to be available, an allowance statement will be required, and I'll come on to look at this in a bit more detail later on. Entitlement to claim the allowance will arise where a building or structure is constructed or acquired. It is necessary to consider the specific circumstances to determine the amount of qualifying expenditure that is available for the structure and buildings allowance. So, where an owner or an investor is constructing a new building, the qualifying expenditure is based on the capital expenditure incurred on that qualifying building or structure. However, where an existing building is acquired and the original construction expenditure on that building was under a contract entered into after 29th of October 2018, the allowances can be available to the purchaser. However, it is necessary to consider who the building is being acquired from and whether at the time of acquisition the building is being acquired used or unused. So, as detailed in the diagram above, for example, where an existing building is acquired from an investor and the building is unused, the qualifying expenditure is based on the lower of the sum paid for the building and the capital expenditure incurred on the construction itself. However, if the building is acquired used, there is no balance in adjustment for the seller, and the purchaser simply claims a residue of the allowances over the remaining life, as I mentioned earlier. However, where the building is acquired from a developer, it is necessary to consider whether it's used and unused, because the basis of the qualifying expenditure is different as outlined in the diagram. One of the key considerations to be able to claim structures and buildings allowances will be the need to satisfy the allowance statement requirement. The draft legislation states that the qualifying expenditure will be nil unless the allowance statement requirement is met. This applies where a building is constructed or the relevant interest is acquired. And this is going to be a key point for claiming the allowances going forward. An allowance statement needs to provide certain information, but the legislation does not clarify if this has to take a specific form or if it is required to be submitted as part of the tax computation or return. The allowance statement needs to detail certain information, including identification of the building or structure, the date of the earliest written contract for the construction of that building or structure, and the amount of qualifying expenditure incurred on the construction or the acquisition of that building or structure. In addition, the date the building was first brought into non-residential use. So an allowance statement will be required to be prepared for the construction or refurbishment or alteration of any new construction projects. And where an existing building or structure is acquired, it will be necessary to obtain an allowance statement, or at least a copy of it, from any previous person who was entitled to the relevant interest in the building or structure that was eligible for SBAs. As stated earlier, without an allowance statement, no structures or buildings allowances will be available. This table summarises the main capital allowances and reliefs available and highlights the changes that were announced in the last budget. The increase of annual investment allowances to £1 million per annum for a period of 2 years and the introduction of structures and buildings allowances got the headline news in the budget. However, other changes in allowances offset the benefit of these changes. This includes the reduction in rate of the special rate pool from 8% per annum to 6% per annum from this April, and also the withdrawal of enhanced capital allowances for energy saving and environmentally beneficial plant and machinery from next April. In addition, the longer-term interaction between capital gains tax and structures and buildings allowances should also not be overlooked. In summary, the introduction of tax allowances for buildings and structures is clearly welcomed. As explained, some of the rules are complex and are inconsistent with the treatment of other existing capital allowances. However, without careful consideration of the legislation once it is finally published, and ensuring that the required documentation is in place, could result in the loss of the allowances available.